Hello, everyone. Thanks for joining and welcome back to Wall Street Bullion. Our guest today is Stephen Hochberg. He is the Chief Market Analyst at Elliott Wave International. Welcome back to the channel, Steve.
Thanks for having me. I mean, appreciate it.
I appreciate you coming down and speaking to the precious metals community and the investing community. Uh, Before air, we were talking about the gold Dow ratio. What's interesting about that right now?
Well, a lot of things that are interesting about it, but so we're just talking about Dow and gold. And back on August 25th, 1999, which was 26 years ago, the Dow was selling for 11,326 and gold was at 252. So the Dow gold ratio, Dow divided by gold, which has historically been real money, was 44.85. So it took 44.85 ounces of gold to buy the Dow. So here we are today, yesterday, 26 years later. Dow's not at 11,326. It's at 46,000. And it's up 4.06 times its value 26 years ago. But gold's not at 252. Gold's at 3,700. So gold's up 14.7 times its value back in 1999. So while the Dow's rallied 300%, the gold's rallied 1,350%.
Wow.
And it just blown away the Dow in terms of its value and its bull market. So the Dow gold ratio, instead of being 44.85, it's now 12.57. In other words, the Dow, in terms of real money, which has historically been gold, has lost 72% of its value over the last 26 years. And so when you're looking at the market, I mean, if the market was just priced in real money, there would be no question we'd be in a bear market. And you can kind of see that in society now, the kind of divisiveness and the negative mood that's out there. And I think that's reflected in the Dow gold ratio. And the only way that could occur basically is if the US dollar priced in gold had to go down. In other words, it's lost well over 90% of its value, which means that your purchasing power has been decreasing over the last 26 years. So our view on the markets is that eventually the nominal Dow priced in dollars is going to converge with the Dow priced in real money, which is gold. And I think the U.S. market is setting itself up for a pretty big bear market coming up.
So, like, what does that, show to the investors right now? Like looking at it, do you think the trend will continue? Do you think it'll level off at some point? But if you're looking from the 90s till now, it looks like that trend just keeps increasing and keeps continuing. So what happens to the Dow, let's say in another 20 years? Like how many more years can you diminish the purchasing power till it's non-existent?
Right. That's a great question. I think you can't. I think we're at the end of the road, or very close to the end of the road. And if you keep diminishing the purchasing power, pretty soon their money is going to be worth nothing, which is why you need to have a portion of your assets in gold, which is holding its value. Silver too. Silver's a little bit more, a little bit higher beta, a little bit more volatile, but gold's been holding its asset for 26 years now, or holding its value. And even longer. I mean, that's why it's considered real money. So I think your question is pertinent, and you really want to take a look at where can you put your assets now that are not going to lose value going forward in terms of its purchasing power.
Are you pulling some of your positions and some of your money away from the stock market and moving it into more gold? Or like, what are you looking at right now? Are you just day trading? What are you doing?
Well, basically, our recommendations to our readers, our subscribers, is number one, be safe. I think we're in a very high risk environment in the market. If you look at any valuation metric, we're in the top 99 to 100% of all time. Not overvalued. We're historically overvalued. So we've been preaching safety. In terms of safety, that means very short-term treasury bills. You're still getting 3.84% on your money there. Very safe, and a good portion in gold, because gold is we think, going to hold its value. It's in a long-term bull market. I think short-term, we got a little bit ahead of ourselves here when we could be due for a pullback in both gold and silver coming, but it's just going to be a partial retracement of an ongoing bull market.
Hello, my silver and gold bugs. I just wanted to say thank you so much for watching the video. Hit the subscribe button hit the like button and also hit the notification bell so you don't miss any future uploads. Back to the video. Absolutely. Now, what are your biggest concerns, Steve, right now? Is it, the Fed moving to lower interest rates while you still have so much uncertainty and inflation? Is it, the bond market? What are your biggest uncertainties right now? What are your biggest concerns?
Yeah, what the model that we use, which is called the Elliott wave model, really deals with psychology, market psychology, and the crowd and how the crowd behaves. And they move in a patterned way from pessimism to optimism and optimism back to pessimism in a very patterned manner. So our biggest concerns now really aren't fundamental concerns. Our biggest concerns are what the pattern looks like, because in our estimation, the pattern of the rally in the market is in its very latter stages. And so when that pattern completes, that's when you get a bear market. And that's what we're coming up upon here.
What are your thoughts on central banks like Saudi Arabia getting into silver now?
Yeah, central banks usually are the last to act on a trend. So we'll see what happens in terms of their purchasing power and where silver goes. But we don't take our cues from what central banks do or what the Fed does. We're basically taking our cues from what investors are doing as they trace out these patterns. So the pattern in silver, again, like gold, I think it's gotten a little bit ahead of itself. We're coming into a correction, a price retracement, a partial retracement, but I don't think the bull market is over in either of those. We're just going to have to go through a period of where there's going to be consolidation, and it's going to be probably be frustrating for a lot of the gold and silver bulls who think the market's just going to shoot, straight to the sky. It doesn't quite work like that, as you know very well. You've got your advances, your declines, but overall the trend is to the upside.
Now, you're saying, there's going to be a bear market, or that's what the trends are looking at right now. But what if the Fed lower interest rates and they start printing, a ton of money again, and they get that money machine going again, lower interest rates? Historically, doesn't that mean the stock market will go up, or what are your thoughts?
Now, we just have to look back to fairly recent history, 2007, 2009. We had a huge bear market where the Dow S&P lost well over half of their value, over 50%. And the Fed was cutting interest rates the whole way down. They
Oh,
started at
no
six and
way.
a half percent. It went all the way down to zero, basically. And the market continued to keep falling and falling and falling and falling. It stopped going down when the Elliott wave pattern, the pattern that we saw, was coming to an end. Once it ended, it started rallying, and really didn't matter what the Fed was doing at that point.
Really? So the Elliott wave was looking at what the investors are doing, and then it modeled that. So is it repeating something similar to 2008 and 2007, or no, not as drastic?
Well, I think in percentage terms, it's going to be a bigger bear market than 2007, 2009,
No
because
way.
because the pattern that's ending is a pattern that goes all the way back to the 1932 low. In fact, we could trace that pattern back even further, even though the data is not as robust as it is from the 1930s to now. But yeah, I think in percentage terms, the Dow is going to go down a long way. And in real terms, you know, in terms of Dow Gold, it's already down. It's already down 72%.
Mhm.
So the question is, how far is it going to go down in nominal terms, in terms of dollars? And I think, again, we're going to catch up to that Dow Gold ratio on the way to the downside.
Welcome to the Cayman Islands, a premier offshore jurisdiction where natural beauty meets financial stability. Here, your wealth is more than secure. It thrives in one of the most trusted and respected financial centers in the world. For over a decade, SWP has been the trusted choice for precious metal investors worldwide. Our purpose-built 6,000 square foot facility sets a new standard in precious metals storage. We are proud to be one of the only vault operators approved by the London Bullion Market Association. Beyond safeguarding your assets, we're committed to making a difference in our community by supporting local causes and events that reflect our values. As we continue to expand and innovate our services, we ensure that your wealth is safe and strategically positioned to shield you from the uncertainties that lie ahead. Strategic wealth preservation, trusted today and ready for tomorrow.
Absolutely. No, that's great advice, Steve. W Before you go, I want you to just give your last piece of advice or guidance for any investor out there, whether they're older, a veteran, whether they're a new investor, whether it's the youth who's trying to protect their purchasing power. What would be your guidance for everyone right now?
I think the real guidance is safety, is to be safe at this point with such historic overvaluation in the market, with the metals doing very well and should continue to do well, even with a correction coming up. I think you really want to be safe. And over on our website at www.elliottwave.com, got a ton of free material that will help people understand what we mean by safety and how we look at the markets and the models that we use.
Absolutely. Now, before you go, it's been a huge pleasure. Thank you so much, Steve, for coming down and speaking to the community. I want people to find your work. I want people to follow your work. I'll put the links in the description below, but where can they find you?
Right there at www.elliottwave.com. Elliott has two L's and two T's in it, and Elliott Wave is just one word. So elliottwave.com. Go on there, click around. If you're interested in gold and silver, we have a button right there. Just click on that button, and we're going to send you our latest report going over our forecasts from the past to the present and what we think about in the future. And people might enjoy that.
Well, yeah, thank you so much, Steve, for coming on. It's a huge pleasure. And as the market develops, as always, would love to have you back on in the future.
Thanks. Appreciate it.
Talk to you soon.